So obviously in that type of environment there, at the oil price away down here, I'm thinking to myself, you know what? This is almost guaranteed to be a buy trade on oil. And the oil price goes straight up off of that print. It's pretty obvious, isn't it? When you see it, it becomes actually quite logical when you actually dissect these elements. So whether you use the Brent WTI spreads to read the Brent WTI crack spreads against RBOB, or whether you use them instead to tell you about directionality of oil, then it doesn't make any real difference. So when I see this setting up here, for example, and I start seeing that setting up there, and I say to you, well, what is that? What the hell is that trade right there? That's amazing. You know, that potentially is absolutely amazing from an overall perspective. What is it though? Well, obviously the idea is that you're going to be trying to sell that high price on Brent, and you're going to be trying to buy the low price on the orange line, which means you're going to be buying RBOB and selling Brent. And it becomes very similar to what we talked about over here. So you start to look at that and say, well, that's going to be long oil, surely, because you're buying RBOB. You're buying RBOB because it's cheap here. So you're buying the orange line, which is bullish oil. You're buying the orange line because it's bullish oil. And obviously what happens is the oil price goes straight up off of that storyline. And again, it makes a perfect logical sense when you start breaking down the spreads and the relationships to each other. And then obviously, we obviously get the gaps, which we have to deal with. It's just the nature of the beast, of course, that we get gaps. But we can actually avoid the gaps by doing things like Brent against WTI December, for example, in which case, they don't have gaps, but obviously you're losing some detail when you start drilling down into the lower time frame charts. And it really is something that you can start to put real weight against, because even down into the likes of a 5-minute chart, there's not a lot of activity in these, because obviously it's not that kind of market, but there's enough activity to see a slope. So when we see the slope, they should be positively correlated, of course. But when we see the slope, we can start to understand the possibility of certain trades taking place. So for example, I know that there's a buy trade in here. I know there's a sell on the orange line by the shape of it. I know there's a buy trade in here. So what is that trade? I'm buying what? What am I buying? I'm buying Brent oil. What am I selling? WTI. So what's the orange line? I'm selling RBOB. What am I buying? WTI. If I'm selling RBOB and I'm buying Brent oil, what's the crack spread doing? What's the actual crack spread doing? The global crack spread. Buying Brent, selling RBOB. The global crack spread is bearish. The global crack spread is bearish. One would imagine that's going to be bearish oil. So this is a bearish oil narrative in here, isn't it? Yes? Does everybody understand that? This is a bearish oil narrative in here. So what happened to oil today from those areas? Oil prices peaked out at the top edge here and have subsequently sold off all the way through that bearish oil narrative. Make sense? Pretty obvious, isn't it? It's just about the logic that goes into these narratives. And it is just that logic, isn't it? It's just that logic when we start to recognize the little shifts in the sand, the little changes that start showing up, and the relationship that this allows us to build really gives us context to what we're seeing on a macro and a micro scale basis. If I've got a discount on the Brent WTI spread against the RBOB oil spreads, then I'm obviously looking at that and saying, okay, well, the spreaders are going to start selling product, macro, global product, that with oil prices at top edges, that's a very good sell, and that results in a very, very substantial sell-off on oil product. So that makes sense, guys. Hope so. Hope so, hope so, hope so. Bonds have stalled at 159.10s, coming into, obviously, the cash open. Bonds stalled. Cash open, the prices Just getting some numbers there, guys. Just getting some numbers. Okay, one of my short sales, which is ticker symbol GREE, has opened slightly down. I'm aware of that. I sold it at 29.50. There was short selling available on GREE yesterday. We had a buy side spike from 29.50 to 32s on the cats. It went below. I never took it at that stage. It went back above. There was another cat opportunity to buy this. When you see SS, it means you can trade both directions. That's basically all it means. If you see SS on your cats, it means short sell is available for people if they want to go and get it. So when you see the price breaking, I've got a choice to now go short. After that failure again at the top edge here, I'm now looking at this market as a high probability candidate for the short sell. And it's opened obviously down quite nicely. So we weighed 29.50s up to about 32, sorry, $2.50. And then we've went 29.50s down to 24s for $5 on the short sell on that one. Let's take a look at another possible short sell candidate from yesterday. And it was this symbol here. It was ticker symbol FOLD. It sold off immediately from the cash open. And it was almost instantly into a short sell position at $11.20. It closed at $9.60. You can see it's opened up a little bit. That's always the gamble you take when you're short selling, as it could open gap up massively and you could end up with a very, very sore position. But anyway, it's opened up a little bit and it's just stalling just now. So I think if you were in a short sell position on that open, I think you would just be quite happy to say, you know what, I'm going to close that one off at $10 and I'm going to call it a bit of a profit. You sold at $11.20. You're closing it at $10. That's still a 10% profit, guys. That's still a 10% profit. This morning's short selling opportunities. The first one we had was PALT. Let's take a look at that one. You can see what happened to PALT. It traded higher, started to sell off. You can see it rejected the first push at $12, started to sell off. You can see it scratched out, so there's no trade on this one at the moment, and it's gone neutral. PALT. The second opportunity was ticker symbol OG, and you can see on OG, very similar type situations. You can see that this opened, sold off just a little bit, not by much, sold off just a little bit. It's gone back above, and again, this is a two-way trade that you can take. You can be sell side and buy side these SS trades. Ticker symbol AMTX, also a short sell opportunity, very similar in nature. There was a sell opportunity just there. It went from $18.50 to $17.20. It came back out and scratched. That's okay, nothing wrong with that. Nothing wrong with that, just not making any big sticking holds. PRGO, very similar. This time, this one has stuck around. You can see it's short sold off the $50.75, currently trading down at $48.20. It's a $2 profit. It's about approximately 5% return on your money on that trade just there. And the final one is ticker symbol FAMI. FAMI. And you can see that this never got into a short sell. It went bullish at the open, and it's kind of held on to those bullish gains. So at the moment, this is a buy trade only. It hasn't had a short sell component below the 44 cents. It's a very, very cheap stock. So obviously it's one of those stocks that could go a little bit nuts at times. A lot of people wonder about short selling and about the idea behind it, and can you actually make any money? Well, I'll show you one of our best short sales that we've had in the last 2 weeks or so. It was ticker symbol IRNT. It was one of our cats. We got a rejection high almost from the gun, and it's went from $44, currently trading $18, guys. That's a 50% return on your money. 50% return on your money. Now, it's a long-term swing, I get it. But Still 50% return on your money, guys, in 2 weeks. Crazy stuff, right? Crazy stuff. Gotta love it. Equities have done well at the open, guys. I hope you've all joined